Okay, this is the same table that you have. Bit fine, I can't get it any bigger. Wonder if I can. That's better. Okay, so the key principle that you need to follow or appreciate going into the exam, as I said, a large percentage of the exam will not be essays, but you would have either a CPM or EFE, financial ratio for sure, or brand strategy matrix, or IE matrix. You'll have choices, so one of the things you will need to be able to do is to analyze a matrix. And one of the key things about it is you would realize, let me go through shortly, it requires your knowledge to integrate concepts. So they said it's not asking you just to look at numbers. Your role is the role of an advisor, consultant, so you have to do a comprehensive analysis of the numbers, but what is most important is your management or strategy interpretation of numbers and the implication of the numbers for business and recommendations. So you will have to make a set of recommendations, and it's just not that this increased by 10% or this reduced by 30%. You will need that, but you need to be able to understand or state clearly the implications for strategy, whether that strategy could be related to value chain or integration, ways for you to improve revenues or reduce costs. So I just want to be able to make sure that you know you still have to integrate our business model. It might be something that you might have to mention related to the business model or even vision and mission. So first, we look at the numbers. Right, and most of them are not difficult ratios. Some of them are some basic ratios. So you start then with what we don't have here will be the sales, and you realize it looks at quarter versus quarter year ago. So it looks at a quarter now and a quarter year ago, and it looks at income year to date. Right? So you're looking at a year to date, and comparing the company and the industry. You're looking at sales 5 years, so you have sales a quarter analysis versus a quarter year ago. And you do the same thing for net income quarter versus quarter year ago, but then you have a 5-year sales average, annual average of sales, and a 5-year net income average for both the company and the industry. As I said, we're not dealing with the S&P 500. And then for the current price earnings ratio, you compare the industry and the company again. You also have a price sales ratio and a price book ratio. There's also the profit margins, looking at gross profit margin versus net profit margin, and then it does a 5-year comparison. And finally, you have debt to equity ratios and a current ratio and quick ratio, and then interest coverage, etc. And comparisons are made to the firm and the industry. So let's begin by looking at the sales ratios. So first you look at numbers, right? So you have to first analyze the numbers and tell us what the numbers are saying. So when you look at the sales net income ratios, what are those ratios telling you? What are those ratios telling you? Yes? Yes, folks. Somebody begin. Folks, this is part of preparation for the exam. You know, the more you discuss, we're here to discuss to help you to understand it. So keeping silent wouldn't help anyone. So all the lectures are finished. From now on, it's just interactive sessions going through the kind of things you're going to get in the exam. So I'm not here to give notes. We're here to analyze and help you to discuss. So who's going first? What are the sales and the income ratios telling you? Sorry? You talk a little louder, please. What you're asking me a question. We're having a discussion. Tell me what you think. Don't ask me questions. We're here to have a discussion. And we'll work it out. Some other body will deal with the issues. Right, so what is that telling you? Right. So go ahead. So what is it telling you? Right. But remember, the company is being compared to the industry. So whatever analysis you bring, you need to be constantly making comparisons to the industry. Because looking at the company alone doesn't tell you anything. Suppose the industry had made a bigger loss. You see. So if the industry had made a bigger loss, is that significant? Of course it's significant. So what does it tell you when you look at the net income over a 5-year period? A little loud. Everybody wants to hear you in a discussion. That they are far below the industry standards. Right? Anybody wants to add anything? Speak a louder, folks. Their sales? Yes. Correct. So if you look at the sales over the 5-year period of the firm versus the sales, so you need to calculate and make those comparisons. How significant is the difference of sales over a 5-year annual period? So you're saying then that what? The sales for Whole Foods seems to be, is it marginally bigger over the 5 year, significantly bigger? Right, it's significantly bigger. So what does that tell you then? So it means then that the company seems to be having difficulties in managing its costs, right? Because of this big variance between the sales over the 5 years and the fact that they are making a loss. And if you see, the industry did not have such a high sales outputs as the firm, but in terms of the profitability. So the converse is true, that the industry seems to be. So what then would you add to that? You realize that the company seems not to be managing the cost. So you're a consultant, you're advising the company. What are you going to tell this company? Louder, we're in a discussion. They need to analyze this cost structure. Go ahead. You see, folks, what I'm saying in the exam, I expect in-depth answers. You see, just to say the cost structure is just part of the answer. So it means then that they might need to analyze their value chain, or you can assume this company may not have conducted appropriate value chain analysis to look at its cost structure. So hence, you're saying then that what? Go ahead, what you were saying. Go ahead. Sorry? I haven't brought anything. You, you were talking. I made my point. You made your point. Go ahead. Sorry? What's that? Well, I'm worried. I'm asking you. Go ahead. You were making a point. Make the point. Madam. Why you pass? Listen to what I said at the beginning. I said in the exam you have to do two things. You are a consultant. And I don't think students understand the point I'm making, you know. And I'm saying some danger signs in this class. I'm telling you that. I told you at the beginning what you have to do to pass the course. But I am saying danger signs. You know what the danger signs are? Students are not taking me serious. I said that the exam is not an exam about rote or regurgitated theory. I said that from day 1, 2, 3, 4, 5. So in the exam, you have one role. You are a consultant. You're not a student writing essays. So up front it says in the exam that each question will tell you clearly you are the consultant for a company. You understand? So it's not a student writing a theoretical exam. And that's what's different about this course. So as a consultant, you're doing two things. You have been hired to advise Whole Foods about its financial position. And the first thing you have to do is to analyze its financial statements. So when you have analyzed the financial statements, you have to make a set of recommendations, which is the point now. You have to make recommendations. So you need to advise Whole Foods what things it needs to do to be able to improve its profitability and maybe sustain its sales, because the sales are pretty good. So in the recommendations now is where you've got to cover a whole set of things, and different students will cover different things. You understand? So it's not an answer I'm looking for, and that's where your thinking and analytical skills will come. And the only way, folks, you're going to get that is to have conversations with me over the next 4 weeks. But if you just sit down and listen to other students testing their knowledge and capabilities, you don't know if you can do what they can do. So I'm saying in these interactive sessions, like a big tutorial, you know, if you determine you want to hear you say something wrong, we all don't say here, folks. So if you say something wrong, what's the problem with that? I'm amazed among the students. They're saying the right thing, and then when I ask you to be, you go to somebody else. Folks, we're big adults in this. We have to prove who right or wrong. I want you all to pass well. You understand? I want you all to do well in the exam. So I see so many students saying the right thing. They whisper the right thing to the colleague. I said, what do you say? Nothing, nothing. I said, what do you say? Nothing. They can talk hard to tell me nothing, but whispering the right thing to their colleague. Folks, talk out. You know, let your colleagues hear what you're saying. If it's wrong, we can correct you and you don't make that mistake again. I don't know why you're also frightened to say the right thing. You know, let's have conversations. I want you all to pass well. But I know the only way you can know if you're doing the right thing is to practice it. Have conversations with me. Because I know sometimes the language used is a language you need to learn. But keeping it in your head and know if you can speak it correctly or write it correctly. So it's a very simple principle. Unless if you can speak it, you can write it. So that's what I want you all to do. Have conversations with me over the next 3 weeks. Don't sit down and look at me and be frightened to talk. You know, we ain't here to prove whether you're right or wrong. I'm here to help you to know how to analyze the matrices, folks. So please, let's engage in our conversations. I know there's certain people every week that have been talking. I want to hear the others to make sure you're confident to leave here knowing, yes, I know this stuff. You understand? So that's the point. It is recommendations now that you would have to put on the table. So I want to reiterate, folks, the questions in the exam are largely not essay-type questions. You understand? So they're not essays you just prepare and write these essays. So before you go in the exam and get a shot, I'm telling you up front. So what we are doing here is just what is going to be required in the exam. So what we're going to do this morning, folks, is exactly what you will have to do in the exam for the ratio question. What is it? Can you give me that? You understand what I'm saying, folks? So I want you to practice with me that you know exactly what you will have to do. And this is one of them questions, a very simple, it's not a difficult question to do, you see. So let's go on. We are saying then you identified as an issue of cost. Somebody said it's related to the value chain. So if you're recommending then to management, what kind of things you recommend to management? What things do you recommend to management? Go ahead. We know the costs are high. The sales are high, but profitability is in the negative. So what are you going to recommend to the company? Yes? Mm-hmm. Which process? Right. So she said you're going to see if you're going to analyze the exorbitant costs. It means what you have to do then to see that. So it means that you will have to engage in strategic cost analysis to identify where your costs are unit by unit. And when you go through that process, then what are you going to help the managers to identify? You're going to help them to identify their cost drivers. And once you determine the cost drivers, it means you'll be able to look where you might have a cost advantage or where you might have a cost disadvantage. So you cover that. Somebody else mentioned a very important point before. Somebody mentioned something about variable cost. So how are you going to deal with the issue now? Because the cost got to be either part of fixed cost or part of variable cost. So how are you going to deal with that? Yes, sir. And I didn't know you were so artistic. Me? I don't back on anything. You're telling me which you're advising. Sorry? Of course you can't cut down fixed costs. How can you cut down fixed costs, folks? Link it to a strategy. I can retrench. What kind of strategy is it? A defensive strategy. So you can advise the company, listen, your cost structure is so high, you need to consider a defensive strategy, and you will now implement retrenchment. And that's the language I want to hear. A defensive strategy, because you're in trouble. Look at the industry versus you. 14. So you understand? So telling me, all I want you to do, I'm not looking for a right or wrong answer. I just want you to be able to show me you understand these concepts. So even if you get numbers, suppose you calculate a percentage wrong. I'm not interested whether it's supposed to be 15% and you calculate 25%. That's insignificant. The point is you understand there's a variance. You understand? So I'm not looking for perfection. I'm looking that you understand. You can think and analyze and show me you know the concepts and the activities that management can use to improve the costs to make the company. That's all I want. I want you to show me you know the language and you know the techniques and the tools that management can use, folks. You can get all your marks. Trust me. So I'm not looking for a clone response. I don't have a response, a perfect answer, and which makes it easier for you as a student, you see. So you understand what I'm saying then? So you said that that's one approach. So that's how I deal with my fixed costs. So who might not like it? Or who else might not like it? Trade unions, which is an implementation issue. So you can feel free to determine, but from an HR perspective, I'm advising management, if you are unionized, you might need to consider having some discussion with the union to let them appreciate that it is a decision we have to make. We've got implementation deals with the human resource issues. You understand what I'm saying? So students can go down so many different angles, but all you're showing me, I know this course. I know the concepts.
Right, but you providing it's going in assumption that these employees will have tacit knowledge and that you can do without them.
And Collis, that's an excellent, say that again loudly.
He's going on the assumption that his employees does not have tacit knowledge because if he can do without them. If he cannot do without them, that idea is not going to work.
So it's a brilliant, excellent Collis, but there's a response you can deal with that, which deals with the normal laws of probabilities. Will a company have 100% employees with tacit knowledge? So what are you going to advise your employer then? Sorry? That's it. So I will start to scale back, following all laws and regulations to ensure, and you would advise your company know that you're advising, you must ensure that those that you're retrenching are not your employees with the tacit knowledge. Because why is it important to make sure they're not the employees with the tacit knowledge? Because they will give you the competitive advantage, because when they have tacit knowledge, they also will have distinctive competencies. And if you want to go to the top now and get 100% in that particular part of the question, you got to add one thing now about these distinctive competencies. Put it in a theoretical framework. Put it in a... And so it means that you're going to say then that if you put it in the context of the resource-based view, the resources then, and why we cannot let them go, because when they have tacit knowledge, an internal resource means that once they have a distinctive competence, it is rare. It cannot be easily, and that's it, folks. You know the stuff. But all I'm helping you to do, I say it's important to have conversations. All I'm doing you is show you how to fix the puzzle, how to put the pieces together. Because as I tell people, a puzzle in a box could be 1,000 pieces. I'm just guiding you over the next set of weeks to know now how to place these pieces to complete the picture. Yes? Of course, that's what they do. And in fact, that's another excellent question. She said in real life, so if you go back to old Carolina Wireless and Line, when they were retrenching, they made sure that the high flyers and the people there considered to have the highest knowledge were the ones that were kept. And even when those persons came forward to offer to get their package, they would give them incentives to stay, because they can't afford for the people that got those skills to leave. So that's an excellent point. It's a real life thing, folks. It happens every day. You're retrenching and you look for the people with the lowest skills or the lowest performers, but you don't send home your people who are the highly competent with the unique skills that will help your organization to shine. And organizations who have done it ended up worse off because you allow all kinds of people to go. You never did the analysis, and you allowed a lot of your tacit knowledge to go. Now, to do that, there's something that will happen in HR, if you remember your HR. How do you determine then who people would have all of those skills and competencies? You would have done it in the HRM. Something called anybody can remember? A human resource audit. I'm sure you did that well with Nicole. Who does that course now? Dion, right. So I'm sure Dion in recruitment and selection would have dealt with the issue of a human resource audit. You all did human resource planning, right? You can remember human resource planning? Right, yeah. So under human resource planning, you remember it is environmental assessment, assessing demand, assessing supply, and in the supply assessment is where you do the HR audit and you get your specifications and all of those things. So we have looked at the costs, the sales dimensions versus net income, and you can infer. So between sales and net income, what is taken out? See if you know your accounting. Collins, you should know this. Between sales and net income, what do you take out? Sorry? There's another word you call it. It begins with C. Cost of goods sold. The cost of goods sold. The cost of goods sold. Sorry? What's that? Right. But the cost of goods sold is one of the main ones you want to be able to mention, right? Linking to. Right? Because especially when you're a big manufacturing entity, you see. So you don't just want to say expenses. When you're a manufacturing entity and you're into production, the challenge you're going to have, which goes into the realm of cost accounting, you can have so many variable costs associated with just getting your things out to market. Now the other thing, what other thing would stand out in this first one, the first one with sales and net income? What stands out? Something stands out that.
Sorry.
Yes, Carlos.
Sorry, there's something very, very important. You see it on the fifth line, net income of the 5-year trend.
Yeah.
For foods, net income figure is negative, which points out then that this company is hemorrhaging.
Yes.
This company is, well, versus the industry standard is approximately 40%, which states then that the industry is that is the industry standard. But when you compare for foods, for food is approximately 15%. 16% less than the industry standard.
Yeah.
So it gives you an idea then that cost drivers and whether it's fixed or variable are so that they're consuming all of the resources from your initial capital. So
Stephen will continue for you. Yeah. But they try. If you look at the quarter versus year ago quarter, it suggests something.
Quarter of this year quarter versus last year.
What do you think is happening there? Sorry? They realize we're not going after the market. It is to call it spoil. They realize that there is a problem and they're trying hard to fix it. It could be they got an ultimatum. If management might have gotten an ultimatum, if you don't fix this problem, you're in trouble. If you don't fix this problem, you're in trouble. I'm going to fire somebody. So they're trying hard to address the issue, it seems there. Trying really, but just a quarter. But I agree with Collis, it suggests there's some hemorrhaging. Over those years, there are some years where there was significant hemorrhaging. So let's go then to the price-earnings ratio. What is the price-earnings ratio? Anybody? What is price-earnings ratio? Anybody? Yes? Right, the value of the stock, or I would prefer to say the attractiveness on the equity market. So big investors would be generally interested. In fact, there's a video I'll show you very shortly with the price-earnings ratio and price-sales ratio. So it's really the attractiveness of a stock that an investor is willing to pay X amount for each dollar of stock, anticipating that if I pay a big value for it now, in the future, I'm going to get my big return. So it's really looking at a future, projecting this. So these are the big players, really. Right? So I'll show you a video on it very, very shortly. In fact, let me show it now. It's a test to you if you want to. Right, let me look at this one. Oh, boy. So this is really a good site that you can go on and actually get some pretty good videos explaining these ratios. So let's look at this one.
The PE ratio is used to determine how much investors are willing to pay for a stock relative to the company's earnings. The PE ratio is used to determine how much investors are willing to pay for a stock relative to the company's earnings. It's calculated by taking the current price of a stock and dividing it by the company's earnings per share, or EPS.
We started again, sorry.
The PE ratio is used to determine how much investors are willing to pay for a stock relative to the company's earnings. It's calculated by taking the current price of a stock and dividing it by the company's earnings per share, or EPS. Ken wants to buy a stock. Al's Ice Cream and Bob's Frozen Snacks both trade for $18. Al's EPS for the year was $2. Al's PE ratio is 9. Bob's has an EPS of $6. Bob's PE ratio is 3. If Ken buys Al's, he pays $9 for every $1 of earnings. If he buys Bob's, he only pays $3 for every $1 of earnings. Using the PE ratio, Ken decides to invest in Bob's Frozen Snacks because he pays less for the same amount of earnings. A PE ratio is useful for comparing companies that operate in the same industry. Some industries, like technology, have very high PE ratios on average. Some, like public utilities, have very low PE ratios. But no single ratio can tell the whole story. Price to earnings is one of the many metrics that investors use to evaluate a stock.
Oh, well, sorry. Oh my God. Sorry. I don't know what it does. Sometimes it shows. But let me see. It shows the. I'm seeing it here. My apologies. Let's just. You can see it now? Right. Sorry.
The PE ratio is used to determine how much investors are willing to pay for a stock relative to the company's earnings. It's calculated by taking the current price of a stock and dividing it by the company's earnings per share, or EPS. Ken wants to buy a stock. Al's Ice Cream and Bob's Frozen Snacks both trade for $18. Al's EPS for the year was $2. Al's PE ratio is 9. Bob's has an EPS of $6. Bob's PE ratio is 3. If Ken buys Al's, he pays $9 for every $1 of earnings. If he buys Bob's, he only pays $3 for every $1 of earnings. Using the PE ratio, Ken decides to invest in Bob's Frozen Snacks because he pays less for the same amount of earnings. A PE ratio is useful for comparing companies that operate in the same industry. Some industries, like technology, have very high PE ratios on average. Some, like public utilities, have very low PE ratios. But no single ratio can tell the whole story. Price to earnings is one of the many metrics that investors use to evaluate a stock.
Let's see if we can get the other one. Same thing is happening. Just give me a sec.
She reveals how much Wall Street values every day. The price to sales ratio reveals how much Wall Street values every dollar of a company's sales. It used to spot recovery situations or to double check that a company's growth has not become overvalued. To calculate a company's PS ratio, divide its market capitalization by its total sales over the past 12 months. The lower the ratio, the more attractive the investment. A high PS is a warning sign. When a company suffers losses and has no earnings, the PS ratio comes in handy. Unless the firm is going out of business, it shows the firm's shares are valued at a discount against others in its sector. However, comparing sales between companies on an apples-to-apples basis rarely works due to hazy accounting rules. This is where PS ratios can fall short. Examining sales must be coupled with looking at profit margins. Debt is important too. A firm with no debt and a low PS metric is a more attractive investment than a firm with high debt and the same PS. Companies with heavy debt that are teetering on the verge of bankruptcy can have low PS ratios because their sales have not dropped, but their share price and capitalization have. By using enterprise value, the total cost of buying the company, instead of market capitalization in the PS formula, investors can distinguish between cheap sales and debt-burdened sales.
Right, just show it again, yeah.
The price to sales ratio reveals how much Wall Street values every dollar of a company's sales. It used to spot recovery situations or to double check that a company's growth has not become overvalued. To calculate a company's PS ratio, divide its market capitalization by its total sales over the past 12 months. The lower the ratio, the more attractive the investment. A high PS is a warning sign. When a company suffers losses and has no earnings, the PS ratio comes in handy. Unless the firm is going out of business, it shows the firm's shares are valued at a discount against others in its sector. However, comparing sales between companies on an apples-to-apples basis rarely works due to hazy accounting rules. This is where PS ratios can fall short. Examining sales must be coupled with looking at profit margins. Debt is important too. A firm with no debt and a low PS metric is a more attractive investment than a firm with high debt and the same PS. Companies with heavy debt that are teetering on the verge of bankruptcy can have low PS ratios because their sales have not dropped, but their share price and capitalization have. By using enterprise value, the total cost of buying the company, instead of market capitalization in the PS formula, investors can distinguish between cheap sales and debt-burdened sales.
So the principle they are following is that the lower the ratio, the better it is. But they said you have to be cautious that it's not a debt burden company that might look attractive on paper. And the other point they're making, you don't just look at ratios in isolation. You need to look at so many other factors. Right? But they said another point I want to make about the exam. Remember, you only have 2 hours to do 3 questions. So I really can't put a comprehensive case like the Walt Disney case. So I think I would have written it in the exam paper that you can make reasonable assumptions because of constraints of information. Right? So if you're answering a question, you realize there's information not there, and there will obviously be a lot of information not there because you're just looking at a matrix as such. You can make reasonable assumptions. In the absence of this information, my assumption is that X seems to be the case. And once you state up front your reasonable assumption, you can then follow with your logical arguments, as is accepted in any case analysis, because an in-class case analysis can never give you all the information necessary to make wise decisions. You see? So make a note of that. As I said, the intention is not to trick students or anything. Is for you to come, being prepared to think through logically. The only other thing, because I want to move on to the CPM, because that's an important one. The only other thing I want to look at would be see if I can open this. Sorry. If you look at it's whole food, so what kind of industry it suggests it is? It suggests what kind of industry? Could be manufacturing, could be distributing, but big volumes of stock it's going to have. So what comment would you make about the debt to equity ratio? Is it significant? 36, 47? My Antiguan friend, what would you say about the debt to equity? Debt to equity? Debt to equity? Right, lower than the industry for sure, right? But it's not not an extreme variance between the two. What about the current ratio? 1.5, 1.2. Quick ratio, 1.1, 0.6. What would you say about the quick ratio comparing Whole Foods to the industry? Right, they can cover their short-term liabilities. And, sorry? Even better than the industry, Collis?
Yes, and they are actually doing better than the industry since they're carrying a low stock, which is 0.4. Right. The industry carries inventory of 0.6.
So what are you saying about that, the quick ratio?
That they actually, since stock is going to be hard to push off, marginally better.
You sure?
Uh,
What with the industry? Any concerns you need to have here? Sorry? Any concerns you need to have here? What's the danger point for a quick ratio? Huh? What's the danger point? When you should start to get in trouble that you might not be able to cover your short-term obligations. Sorry? Yes, once you get below 1, and if you look at the industry is 0.6. No, there are two things we can assume from this. Right? The industry is 0.6. There are two assumptions we can make from this. Anybody wants to challenge it? Because below 1 is generally the accepted accounting practice. But there are caveats to that. What's the caveat? Sorry? Louder. Right. Right. Or it could be that based on the type of industry, they generally carry a low quick ratio. It could be an industry standard. That's the nature of it. You see? That's how stock moves. That's the nature of the industry. So it could be that is the standard. Or, because if it is the standard, that generally, historically, the industry carries its kind of relatively low quick ratio, it could be a condition of the industry which is high risk. But that's the nature of the industry. It's like technology. To get into technology, you need multi-millions in terms of startup costs. Right? So it could be that, which means that Whole Foods, in terms of inventory management, is doing extremely well. But if you look at the sales again, right, its sales seems to be way better than the industry. You understand? So it might be that they have worked out a way to really get their sales or get the stock out. So that tells you that what would they be doing good that they can get their stock out quickly? The marketing could be marketing, outbound logistics, right? So outbound logistics, their marketing and sales seem to be working pretty well. Or it could be that the industry, generally, the industry might be in trouble. Might be a declining industry, right? Maturing industry where, market declining, sales not moving. And for some reason, Whole Foods seems to be able to still get people to buy this industry that seems to be mature. It could be that, you see. But in a case like that, whichever, you can make some assumptions which perspective you think it is, right? Now, I want to look at to put that on the computer, but at the CPM, I want to look at the CPM. So everybody knows the principles behind the CPM, correct? Everybody knows the principles behind the CPM. Yes. In fact, that's a very good question. Well, to say every single one might be misleading, right? Compare groups, right? So you can compare the group. The first group, second group, third group, fourth group. You compare groups. Of course, you could refer to the individual ratios, but it's not have to look at everyone individually. So you can look at sales and net income as a group, then the other price and sales ratios, margins, profit, net profit. So do them in groups, and you can make assumptions about that then. Yeah. So you can speak about its profitability using those, and about its liquidity using the current ratio, etc. That's a good question. No, you wouldn't have the S&P 500, just the industry and the company. Right. In the example, you wouldn't have the S&P column. You would just have company and industry. Right. If you could. In what sense? What context you would put it in? Yes. Right. Right. Yes, you could as a strategy, correct? Yes. You can use cost leadership as a strategy. But in order to use a cost leadership strategy, it means that you still have to pay attention to, more so than not, if you're using a cost leadership strategy, what do you have to pay attention to? Sorry? Right, so it means you have to what tool you have to pay attention to then? Your value chain analysis. You understand? If you're going to recommend a cost leadership strategy, in the paper you need to indicate as the consultant, since it is recommended you utilize a cost leadership strategy, you need to really look at your value chain analysis and look at your supply sources, your operations, variable fixed costs. So you would have to mention, most critically, the role of value chain analysis in your cost leadership strategy. Everybody understands that? So let's look at the CPM. The CPM speaks to, go for it. Everybody knows the purpose of the CPM. A CPM is used to, Callista, compare, somebody say compare. Right, compare companies operating in the industry or your key competitors operating within the same environment. And as you see, it doesn't have strengths or weaknesses or opportunities and threats, but it has critical success factors. And those critical success factors are generally found where? What factors are mostly found in the critical success factors? Internal or external? Mainly the external, right? Because the advertising, customer, mostly internal, you would find. And the weights is important with the CPM to understand the purpose of the weight. So in a CPM, the weight relates to, anybody can tell me? Yes. In the CPM, it relates to importance in the context of the industry, right? And that's an important point to note. It's an industry weight. We call it an industry weight. Why do we call it an industry weight? Right back there. Yes, why do we call it an industry weight? Yes, it's comparing companies. It's comparing companies. If it was looking at one company, it is just related to that company. But you're actually looking at all the competing firms within an industry or the key competing firms. So it is an industry weight that standardizes what is expected in terms of factors that can give you competitiveness. And remember, in the CPM, it is saying these are the factors you need to focus on if the companies are to become competitive and sustain that competitiveness. So I said before, when you are analyzing either EFE, IFE, CPM, what's one of the first things you do when you're analyzing? What's one of the first things you need to pay attention to? The weights, because they determine importance. And under exam conditions, you can't spend time on everything. If not, you would only do one question. So you focus on those weights that are highest, right? You focus on the highest weights. So in the context of this example, the highest weight then relates to customer loyalty, followed by price competitiveness. The two of those are the main weights. We have a 1, 2, 3, 4 nines, right? 1, 2, 3, 4, 4 nines. So the highest two will be customer loyalty, price competitiveness, and then you have 4 nines. I suggest in a situation where you have 6 dimensions, you begin looking at the highest, the 2.1, sorry. Focus on the 2.1s, and you can mention the second ratings of the 9s are also significant, even though I wouldn't expect you would be able to write maybe on all of them. So for customer loyalty, what is it saying? What is customer loyalty saying? It is saying that FedEx has the highest rating for customer loyalty, followed by UPS, and then USPS, United States Postal Service. And when it comes to price competitiveness, what is it telling us? That USPS has a better price. Right? Better in terms of price competitiveness, followed by FedEx, then followed by UPS. So what are you going to recommend? What are you going to recommend? And remember, UPS is the company you're working for. You're working for, sorry, USPS. You are the consultant for USPS. Right? You are the consultant for USPS. What recommendations will you give? All right, so it means then you might need to look at some other things to support your argument. What other things you might want to look at? Sorry? Customer service. Because customer service is rated at 2. You understand? So that's one of the things they can improve. So folks, you see what I'm saying? Even though we're looking at the highest weight, you can also refer to other factors. Because if customer service is below par, it's going to impact on customer loyalty. So you have to pay attention then to customer service, and you can make whatever recommendations might be necessary, yes? You're asking me or telling me? Why? Why do you have to look at value chain? Right, but there's a direct relationship in the value chain. Where is that direct relationship in the value chain? Is it secondary? Sorry? It is? What's the direct relationship? What are the components of primary value chain? Inbound logistics, processing, outbound logistics, after sales service. That's where the customer service is, after sales service. So the value chain directly looks at after sales service. And sales and marketing functions. That's all part of the process of dealing with customers, serving customers. So your point is correct. But in the primary value chain, you need first to pay attention as you distribute your product. That's the beginning of customer service. Right, so the primary major, but also there's a secondary function. What could the secondary function be? Excellent. He said training. So in order for me to improve customer service, it could be that my sales staff just need training. They just need training. Or there's an alternative. I may need to get rid of some of the sales staff and hire some high quality salespersons. It could be the quality of the sales staff. Excellent. So you see again now, top management, very weak. So the board might need to make a decision, but remember these are the people that hired you. And I'm serious, you're a consultant in the exam. So how you can't tell your client that you need firing. So what are you going to recommend to your client? Huh? No. But they can't get involved in sales. They're top management. They may need training in strategic management. You tell them they need to come to the university and do a course with me. And pay me $500,000. Sorry? You can recommend that? I don't know if you get any additional marks. But that's a serious point. Top management need to really look at their own skills in developing strategy and strategic decision making, in motivating staff, in giving rewards and recognition. That could be the major problem. So you see the point I'm making? So even though you focus on the highest rates, you can actually go and refer to other critical success factors in analyzing the CPM. So folks, what else you can look at? Technological, there's so many different things you can look at, right? And different students will look at different things. But for sure, the ones, I will pay attention to the ones and see how the ones might be linked to the defined ones. Sorry, the ones can be linked to the highest rating. You were saying something? And product quality. Right, product quality could be an issue because product quality again below par 2. Product quality is 2. So we have done our analysis. And folks, what we did just now is all is required. Do your comprehensive analysis, look at the numbers and infer. So just as we were discussing, come to conclusions about the analysis. What have you found? So product quality is 2, suggesting the product quality seems to be below par, which means in your recommendation, you could recommend that's it. So you can recommend an intensive strategy, which is the company may need to engage in product development. And engaging in product development, it means it also has to pay attention to research and development. Excellent. You see the linkages for, you look at a strategy of product development, and since you are recommending product development, you're also recommending that management would need now to pay attention to secondary value chain and invest more in research and development to make sure that they can work with marketing to come up with products that the customers may desire. Yes, scholars?
Yes, but then you got your market share value up too, so you need to back bring the value chain, because no matter how much you do all that, you still got to get your products out.
An excellent point. So folks, the point I'm making to you, under exam conditions, we just looked at all possible approaches. I don't expect you to come up with all these approaches. All you need to do is to zero in on the ones that you are arguing the case. For the purpose of this question, I will focus on the 2 highest weights. And as you go through, you say, in order to understand the issues and recommendations, I will also refer to issues of top management, issues related to international sales, issues related to customer loyalty. You can mention the ones you want to focus on. Because scholars, you can't answer all in the exam. So different students will focus on different things. You just got to argue your case. You understand? And once you argue your case, you're good. Now, there's one final thing in recommendations. Suppose I say to you now, if you had to make a decision to horizontally integrate, that's what the company is saying to you. USPS is saying, listen, we really are not performing well. We need to find somebody. We are at 1.99. Also look at the total weight. We are at 1.99. We really are not doing well. And the board has given a mandate. You might need to consider horizontally integrating. Which company do you think USPS should consider integrating with? Which one? Right. Why? A powerful company performing well. So you now need to show what arguments would you bring for this company to choose FedEx. And there are a lot of obvious things. What kind of things you would mention then? Branding, advertising, expansion, biggest market share, staff, competencies of staff, distinctive competencies. So there's so many angles. Now this makes it easy for you. I don't know if you can get 1 with 4s in the exam like this. Might be a little more challenging. But the same principle, look for the assets, the valuable components of the company, that could add value to where you're weakest. So where you are weakest, you're looking for the company that will prop you up most. Well, you're nearly weak in everything in this one. At least with price competitiveness, right? But it might just be cheap, selling at a cheap price, yeah. Just getting it on the market cheap, and people still not buying it. Okay. And then you always mention the total weighted scores. And that the total weighted scores can tell you whether the company is above average or below average. And we know this company is below average. It is not doing well at all, at all, at all, right? And that's essentially how you would evaluate a competitive profile matrix. Systematically, start with the critical success factors, look at the weights and explain, folks, and when you choose the weights, you need to explain why you have chosen a particular set of factors. Let me repeat, when you are analyzing the CPM, in a CPM, you need to bring a justification as to why you have chosen certain critical success factors over others. And that's where you now argue to say, I have chosen these because you have chosen certain critical success factors because, sorry? Right, they're the most important and have the highest weights. You need to mention that. You need to tell me why. Assume that I don't know, because they have the highest weights. And you begin there, and then you can go to analyze those with the highest weights, logically as we did, and you can then relate back to other factors that might be linked. That it is saying here, the issue of customer loyalty is a problem, but you can look at customer service and see that that is also low. And management, again, is a problem. Management is one. It could be that management is not facilitating rewards and recognition and motivation. Right? And that's not difficult. But I'm saying, folks, the thing now is, for me to be here leading a discussion is one thing. You now need to develop the skills that among yourselves you can engage these kind of discussions and analysis. What I'll do, put up another set of sample of these that you can actually practice analyzing different CPMs and analyzing different financial ratios. Now, in terms of, before we go on, any questions on the CPM? Any questions, any queries? Everybody is quite comfortable with it? Everybody's comfortable? So I just want to make a comment now about implementation, and I will begin with that for next session. If you look at the course outline, we have broken down implementation into about 3 lectures, but it really does not require 3 lectures. And the first one deals with a management perspective, building resources, and the resources, you know, are your human resources, technological resources, financial resources. And then it talks about implementing strategies, looks at budgets and support systems and things like that. And then ethics and leadership. So it just deals with a whole set of management issues. And the bottom line would be, if I have, as you said, if I have agreed to implement a cost leadership strategy, right? If I want to implement a cost leadership strategy, what is the best way for me to implement that cost leadership strategy? That's all the implementation is about. No problem. All right. So in cost leadership, what attention do I have to pay to the human resources, technological resources? What are the implications for budget? What are the implications for culture? What are the implications for structure, systems? What considerations do I have to give to implementing a particular business model? Right? So if in my business model, I have focused on a particular set of strategies to generate revenues, how am I going to best implement those? So suppose I have developed a strategy, I am committed to a strategy of a focused strategy. What are the implications of a focused strategy versus a cost leadership strategy? Right? You see what I'm saying? So if I say focus versus cost leadership, in terms of human resources, what would be one of the major issues or some of the major issues between cost leadership and a focus strategy when it relates to human resources? What do you think? If I chose a focus strategy versus cost leadership, what might be some of the issues related to human resources at the implementation stage? Yeah. Anybody? What might be some of the implementation issues from a human resource perspective? So focus strategy is what? A niche strategy, correct? So if I have a niche strategy, it infers a particular type of clientele. It infers a particular high quality product. So if you are to produce a high quality product or sophisticated product, it means then that your staff now need to be trained to develop and deliver. So picture sales in an environment where you have a niche product versus sales in a cost leadership. So the best way you can put it, picture a sales environment for Swan Street versus, what's the place, Line Grove. So what do you think would be major differences at a physical level between Swan Street sales and Line Grove sales? How it looks. The products you use will have to be more expensive. The staff, how they dress in terms of their skills in communicating, because some of the customers coming there will be customers from all over the world, very rich people who have traveled all over the world, so they want to converse with you. So you just can't stand up. So you need to be able to communicate effectively. Right? So again, the whole environment, the physical environment has to be different to a Swan Street. The ambiance needs to be different. So you're talking about physical resources, technological resources. So somebody going to Line Grove to pay a bill, you can't tell them that we really don't have the machines for swiping cards or credit cards. You surely can't tell them we only take debit cards, not credit cards. But you can go in Swan Street and the guy tell you cash only. And you just pay by cash. See? So there are implications for systems, processes, technology, physical resources, they say technological resources, the skills of your staff. All of those things would factor in if you choose a focus versus a cost leadership. So training and development. So picture you're selling clothes, cheap clothes, versus selling clothes that are brand name and customs made. So people are going to ask you questions about them. Who made them? What materials are used? Where did the material come from? Is it authentic? What kind of cotton? But I sure somebody selling clothes in Swan Street, not interested whether it's from Bombay or China. It is just clothes, and you're selling clothes and you're looking for price. What is that? That's true. What happened there? I don't know what happened there. A technological boo-boo, huh? The clothes? Somebody angry talking about their clothes. So implementation, as I said, is one of those things that very, very practical, and there's so many angles that you can take in utilizing and looking at those. All right, folks, so two things. What we are going to be doing from now on, especially in tutorials, is basically exam preparation, discussions, taking questions from you. But I want to urge you folks, get involved in discussions. It's going to be very, very important. And week after, not next week, week after, we will do a case. We're going to have the final quiz next week, and week after we'll do the final case for you to be able to practice the tools and the techniques and things like that. Now, it's a possibility, I just remembered, I might have to travel next week. So If I can get somebody to fill in, I will. If not, what I'll do, I'll just upload a lecture online that you can listen to and just engage in study. So it's a possibility it might not be here for next week's session. And final, folks, I just want to remind you, semester is just about ended, right? It's just about ended. So you really need to start to buckle up and start to engage your colleagues in discussion in a very, very sustained and significant way. Right? So have a good evening and afternoon. I'll see my people shortly. Sorry? Was he? I believe the quiz will be on the strategies, but I'll just send a note on e-learning. I think it's just strategies, competitive strategies.
So you said the strategies coming next week?
Yes.
That's what we did last week. That's what our quiz was on last week.
On what?
The strategies.
Which strategies?
All the different types of strategies. That's what the quiz was on. I wonder if I'm doing the wrong exam.